Okay, I'm very excited to be talking with Jason Steele. He's a journalist who specializes in covering credit cards and award travel and, in fact, a number of areas in personal finance. Jason, I want to start about this issue of credit cards because, a lot of people make a big deal out of them. There are people who are very pro credit card, people who are very against credit card. Where do you stand in this debate?
Well, that's a great question. I think that credit cards are a powerful tool. And like any powerful tool in the hands of someone who knows how to use them safely, they can do great things. But also like any tool in your toolbox, if you misuse it, you can do a lot of damage. So I think for the majority of credit card users out there, if they can control their debt or better yet, don't have any debt, just avoid interest and pay their credit card off every month, they can earn rewards, they can utilize the benefits of their credit card that are given all credit card holders, and enjoy a very secure and convenient method of payment all at the same time.
Mm-hmm. Okay, that sounds like a little bit of an advertisement for the credit card industry. One of the things that I've always felt is all of these rewards and the points, you spend more time dealing with it and trying to get the benefits than it's worth. You could just go out and work for another hour and earn more money and then just not have to deal with all that. Do you feel there's a lot of value in this, or is it just kind of like getting a free toaster for opening a bank account?
No, I think there's a lot of value, and I certainly don't want to sound like I'm advertising for the credit card industry, because I'll be the first to say that for a lot of people, they shouldn't be using credit cards. My wife shouldn't be using power tools. She'll drill holes in the wall. People who are not good at using credit cards should not be using them. They are not for everyone, for sure. But in terms of the value of credit card rewards, we were speaking earlier about how me and my wife and 3 kids actually were in Israel back in December, and the 5 of us flew to Israel, round trip, nonstop, not nonstop, but round trip in business class, and we did it entirely with our credit card rewards. So while I have some friends who will spend the afternoon clipping coupons for 50 cents off of peanut butter and $1 off of soda, I don't do that. I focus on my credit card rewards. I earn as many rewards as possible, and I use them for very, very high value redemptions. For me, that's business class travel overseas to visit family in Israel or to take a vacation in Hawaii last year.
So in order to get that, let's see how much you really have to invest in that. This is not because I fly a lot too, actually. I probably fly 6 to 8 times a year between Israel and the U.S. And I don't seem to get great treatment for anything. I just, maybe I'm missing something. What's the trick? How do you get all this good stuff? Or are you just flying a lot more than I am?
I am not flying. Well, I am flying a lot more than you are. And I do buy as much as I can on my credit card. Well, there's a few problems here. First of all, I like to tell people the hardest way to collect points and miles, or the hardest way to collect frequent flyer miles, is to step on an airplane. That actually flying is becoming less and less rewarding unless you're lucky enough to have an employer who's going to spring for expensive last-minute tickets or flights in business class. Just buying a discounted ticket in coach is not going to give you that many miles anymore. But the other problem, and I see this with my friends and family in other countries, and Israel as well, is if you're fortunate enough to have an American credit card, you're doing really, really well, because in America, the points and miles are handed out very generously in this very competitive credit card industry. They make money off the merchant fees. In other countries, the merchant fees are highly restricted.
I'm sorry, before you go back, to explain what that means, because I don't think a lot of people understand.
Okay, sure. When I go to the store here in the United States, let's say I buy something for $100, the credit card company itself is going to take maybe 2 or 3% of that $100 that I'm being charged as a merchant fee or a processor fee. It's going to go to the card issuer. It's going to go to the payment network like Visa or MasterCard. And the store will only receive, 97, 98% of that. Well, that 2 or 3%, of course, adds up tremendously over the course of the entire economy, and it funds a good portion of the credit card industry. Obviously, interest charges do as well, but even people like myself who don't pay interest charges still are very profitable for the credit card industry. And so the credit card industry will then go to great lengths to attract and retain customers. And some of those great lengths are offering points and miles for every dollar spent. So while see in the United States, a credit card might earn 1, 2, 3, 4, even 5 points or miles per dollar spent. When I've looked at cards offered to residents of other countries, sometimes it's 1 mile per $5 spent or 1 mile per $10 spent.
And it depends on the country. Interesting. So it seems like it just depends what the competition is or where the market is for credit cards.
Well, yeah, exactly. I mean, the market for credit cards in the United States is very, very profitable, largely in part to these merchant fees, which are themselves controversial. The merchants certainly don't enjoy them. But for better or for worse, that those fees essentially trickle down into, because each customer is very profitable, they can award miles and points for each purchase, and they can award generous sign-up bonuses when we apply for a new credit card.
Mm-hmm. We're talking with Jason Steele, who's an expert in the credit card industry, also in many areas of personal finance, and writes about them quite a bit. And one of the arguments or discussions, let's say, that we have from time to time is we have the pro-credit card people and the anti-credit card people. And those of us in the anti-side seem to think that it's like this myth also that you need to use your card to build up your credit score because you have to have a fantastic credit score in order to get a really good loan for your house or even a good job or a good car rental. Is this a lot of fluff, or do you think there's something to that?
Well, you mentioned getting a good rate for your loans, and that is very, very important. I have a very low interest rate on the mortgage for my house, and thankfully, and that's due in large part to having a very high credit rating. One of the ways you can achieve that is by having 2 or 3 credit cards, keeping very little debt, and paying your bills on time. That doesn't mean you have to use your credit cards for every purchase you make. You mentioned a job. There are some jobs that will look at your credit report as part of their pre-employment background screening, and that is not the same as your credit score. So they're looking for things, like bankruptcies and unpaid bills and things like that. Certainly, they probably figure if you don't handle your own money very well, that you might not be responsible with their money. And that's, I think there are some states that do allow that and some that don't. You mentioned car rentals. You might mean car insurance. Certainly home and car insurance rates do get set, at least here in the United States, in part based on your credit score. But again, having a good credit score...
Let's talk about the insurance for 1 sec. Let me dive into that one. Because a lot of times when you rent a car, I get this. I go rent cars because I travel a fair amount. And I believe, but who's going to read the small print, that on my credit card, there is some sort of insurance, so I don't have to buy the insurance from the car company. But then I figured, if heaven forfend something happens and I have to claim on that insurance from my credit card, it's going to take me months to deal with it. I may as well just pay the extra $50 to the car rental company and let them give me full insurance.
Well, I actually figure that's one of the better benefits that you're offered on your credit card because really, if you do the math, and I have, the cost of insurance per day of a rental is sometimes $15 or $20, and it's the equivalent of paying I forget the numbers, but it was like $4,000 or $5,000 a year in car insurance, which is of course several times what you would normally pay. So I don't think that the car rental insurance being sold by the car rental companies is a good value. It's vastly overpriced in my opinion. And if you can get it for free with your credit card, that's a great deal. And nearly all credit cards have this. Actually my wife, the first time she had an accident in a rental car, and we actually are putting a claim into our rental car insurance that we got through our credit card. And it's not, I don't think it's as big of a hassle. It's going to be a hassle no matter what happens if you're unfortunate enough to get in an accident. And I would prefer to have my insurance for free rather than pay $15 or $20 a day additional.
Mm-hmm. Well, free is always a good price. Again, I think you have to balance the freeness of something versus the amount of effort it takes you to really get whatever it is that they're going to give you. One of the things that actually I see a lot of people using, and even for my kids sometimes when they travel, is we'll pick up a prepaid credit card. What is that really, and does that have anything to do with your credit score, or is it just an easy way to pay?
And actually, a prepaid credit card is not what it is. It's a prepaid debit card. And and that does not affect your credit or your credit score in any way. They're becoming very, very popular because it's not a loan. You can't go into debt. You, as the name implies, have to prepay. And it's some people consider a very safe way to have the convenience and the security without any risk of debt. But at the same time, with these debit cards, you won't get things like automobile rental insurance. That's probably maybe not an issue for them. You won't earn rewards. You won't build your credit history. So it's kind of neutral in the whole world of credit. And it doesn't quite have the extent of protections that a credit card has in terms of being able to, say, charge back goods or services that you never received.
Let's talk about someone who maybe is a little bit less responsible in handling his money and tends to run up a bill every month and maybe doesn't pay the full credit card bill every month, maybe even pays just the minimum. Do you have any idea what percentage of people only pay the minimum or how much credit card debt people on average carry?
Sure. The statistics, and I've looked in many places for the most accurate statistics I could find on this, about 50% of American credit card holders will tend to carry a balance either at some part of the year or throughout the year. So 50% of us are avoiding interest by paying their bills in full every month, and another 50% are not. They're incurring interest on their credit cards. Of them, I don't know the exact percentage that are paying the minimum, but it is a significant number. And, certainly if you're just paying the minimum, I would classify you in the group of people who probably should not be using a credit card, that you're just using it in such a detrimental way that you would be better off using a prepaid credit card, cash, a check, something where you do not have the potential for debt.
Got it. So it's not that it's for everyone. The problem is not that the listeners to my shows aren't above average. They are, of course, but the average person who listens to the average financial podcast is average. That means half the people out there are carrying a credit card balance of some sort. And it seems to me, maybe you can correct me if I'm wrong, that all the other benefits that might come from having the credit card get lost because you end up, if you're paying 10 or 15 or 20 or 29% on a credit card debt, that adds up pretty quickly, no?
I agree. And if I, am asked by friends or families or people who follow my articles, what should I do with credit cards if I have all this debt? My answer would be to stop using them. If you're in a hole, don't keep digging. Pay off your debt. Use a product like a prepaid card that avoids debt altogether. Get your personal finances in order. And maybe some point in the future you could reconsider credit cards. But certainly I don't advise credit card use for people who are carrying a balance and paying interest charges. It's just, it's expensive and it's not worth it.
Sounds like good advice. Sounds like something not only would my grandmother say, and she was a financial advisor, but it's something I would say as well. Jason, you've given us a lot of great points, but unfortunately, we are just about out of time. So in the last few seconds, just tell us, how can people find you and follow your work?
Well, certainly. Well, my work is on many different personal finance websites, and I have links to all of it on my own personal author site, which is jasonsteele.com, and that's just JASON STEELE. I'm also on Twitter at Steele Street, and that's, again, STEELE at Steele Street on Twitter.
All right, that sounds great. We will put links to that at the show notes of today's show. Jason Steele, thanks so much for your time.
Thank you. Enjoyed it.
You've been listening to the Goldstein on Gelt show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.